For TraderInsight.com, I'm Adrian Manns, and let's have a look at how we use the Nasdaq Scalper Trading Plan. So some of you are new to this altogether. Some of you have just been through a boot camp where we talked about this thing extensively, and others are getting ready to go to a boot camp where we're really going to drill this and talk about how to turn the scalper into a very, very big part of the trading day. You see that Rick and I are doing that in the room, and that some of the other guys are following along and doing it as well. Those are mostly people who've had the benefit of the training. But in just a couple minutes time here, I would like to just take a look and clarify what some of this stuff means so that everybody's on the same page when we're talking about the scalp trades in the first hour trading pit. So here we can see Friday's plan for Apple. This was from September the 15th, 2017. The initial bands were a little bit off because of the range on Thursday. We can see that the opening bias is short. That's just going to be in place for the first 15 minutes or so of the trading day, and that our first entry was around 158.84 with a first target down at 58.66, a second entry at 66 down to 45, and then a 45 to 23 move anticipated. So those changed a little bit based on the pre-market activity, not by much, but let's have a look at what happened. We're looking here at a chart of Apple on Friday, 9/15/2017. The first trade, the opening trade that we talked about in the first hour trading pit, that occurred per the trading plan. So that was 158.44, and then we were looking for a 158.23 target. That 44 entry was based on pre-market trading. Told us it was going to open above 158.44. We used a structured conditional order to get us into the trade. If the last price greater than or equal to 158.44, then begin. Sell short stop limit, 158.44 stop, 158.44 limit, not taking any slippage on Apple. And then our target on that is the second conditional order. That's if that first order triggers, get us out at 158.23. And of course, we also have our stop loss in place up at about 158.54. So very first thing in the morning, boom, 21 cents per share. $210 per thousand. Divide that out by however many shares somebody's trading. So if you're just trading 100 shares, you'd be $21 richer for your first 3 minutes of the trading session. If you're trading 500 shares, you're up about $100. But that's very easy math to do. Then, as you saw in the first hour trading pit, we had all of this movement to the upside. No opportunities for any of the short sale entries. When it got up here and put this infield fly bar in, we really had the opportunity to start looking for a short sale. That moved down through 158.84, gave us a quick move to the 158.64 target. But once we had this bounce and this consolidation in place, just think back to what we talked about at boot camp, you are going to shift your bias, and now we're going to start looking at the long side of the market unless we would see, say, a 618 retracement of this move and then a series of waves back down lower again. But for right now, the bias is to the long side. And we can see that over the course of the morning, the rest of the trades that we talked about in the first hour trading pit are pretty much a no-brainer. Here's how the chart played out. We can see that the rest of the levels that were called in the pit, 159.15 up to 159.43, that was based on support and resistance that formed over the course of the morning, and also, of course, this price by volume data that we see on the right side of the chart here. Very important to accurately assess what's going on there. 159.43 then up to 159.62. That band's a little bit narrow, but of course that one was not in place that long to begin with, so we didn't really have the opportunity to get an entry because we never had a test of one of the bands. 159.62 up to 159.86. This generated an entry right here, and then a profitable exit at 159.86. Then once we had the 160.08 band in place, we had to wait a while, but price came back down, hit the band, got us up to the 160.08 line, and that is the last time that we had an opportunity before the New York launch. So that's how this thing gets restructured over the course of the day. Your bias on the plan is just really for about the first half hour of trading, and once that first half hour is done, you need to go in and do the reevaluation based on all the stuff that we talked about at boot camp. I see you guys talking about it in the first hour trading pit. I know you know what you're talking about, and you're doing a good job with this. But for some of the newer folks, I just wanted to give them an idea of what it is that we're doing and what it is that we're talking about. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day on Friday and an even better one on deck for Monday. The best trader education anywhere, only from traderinsight.com.